What's going on, guys? Welcome back to another video. Today we're going to be talking about how NIO just received a $300 billion valuation projection. And that would essentially mean that they would have a $200 price target. But before we get into that, if you guys could go down and like this video and subscribe and comment down below your thoughts, I'd be really appreciative. Really helps me grow on this algorithm and helps me get all this information out to as many people as possible. So if we look at the last few months for NIO, on September 24th, the stock was trading for about $17, $18, and then went on an absolute moon mission throughout October, November, and then peaked all the way at the end of November. It recently came back down and found support around the mid 40s, but it's had some trouble along the way. Right around here on the 13th, NIO had a Citron downgrade, which really crashed the share price, but that really seemed fake to everybody involved because the NIO stock just rallied right back up to around $55. And then also on the 16th, which was about 3 days ago, NIO just completed their capital raise for about 80 million shares at a price of $39, which usually this is seen as a bearish thing for a company, but since NIO is very new, investors know that they're using this money for R&D, market penetration to get into Europe, and then a bunch of other things such as like company management. So now let's get into this massive valuation projection. So this projection was made by Bailey Gifford, and this is a 100-year-old investment firm located in London with about 1,000 employees. So they're a decent size, and they do own NIO. So take this with a grain of salt, but they do have a position in the company. So basically, right down here, they're saying that since NIO has 2 times the traditional margin on premium vehicles, giving a post-tax cash flow of about 100 billion RMB and a valuation of 300 billion. So at the time that this was put out, this had a 40x upside in share price. So if you come over here, NIO also says that 100 million affluent customers will be available by 2020, and car ownership per capita is 3 times lower than most developed economies. So if the affluent customers are going up, the car ownership per capita will increase, along with the market penetration that they have said that they are going to be doing in Europe with their Denmark location. NIO actually could see this much of a massive spike. Now, why would this investment firm think this type of valuation makes any sense? Well, let's take a look over here. So NIO reaches a deal to build 100 EV charging and battery swap stations in China. So basically this means that people who own NIO cars that have a car with a battery with less range than the batteries that are going to be released can go to one of these stations, the swapping stations, and have their batteries swapped out for the new one, and their car will be able to have more range. Now, this is really great for their customers and for NIO. Here's why. So if you purchase a car from NIO, you have the initial purchase. Then if you need to get your car upgraded, that's another charge that goes directly to NIO. Now, it's also great for the customers because if they love their car and they just want it to have more range, they don't have to go out and buy an entire new vehicle. In the short term, however, NIO has a massive event on January 9th called NIO Day. So what this is basically going to do is they're going to unveil their new sedan on their NPZ platform. So this is going to be a very big step in the future for NIO, since they're working on getting their cars fully autonomous, which would be a huge step ahead of all of the other EVs. We also don't know the price of the vehicle yet. So once that comes out, that is going to influence the stock price of NIO. This is because if they have a higher price for these vehicles, and since they're always looking to expand, especially with their European factory where they're going to set up in Denmark in the middle of 2021, they're going to be able to bring in more revenue, which is going to boost shareholder value. They also have teased at a 150 kilowatt hour battery, which is going to have much more range than the other one. It's going to be about a 900 kilometer range. This is going to be almost as far, or if not farther, than all of the other batteries of the electric vehicles on the market today, which is going to give NIO a huge step ahead over their competitors such as XPeng, which is only shipping cars to Europe right now. They have no plans that they've said to set up a full distribution chain, like a factory, dealerships and repair shops, and LI, which is mainly operated in China. Now let's take a look at a couple of the different option chains for NIO, XPEV, and LI to see if there's a way for us to play this the NIO day in the short term, or if it's smarter to just wait. So let's take a look at the option chain on NIO. So let's go to the January 15th strike price or expiration date, and we can look and see what the implied volatility is and what the price of the options are. So for NIO, the $50 strike for January 15th is $4, about $4.55, and the implied volatility is 110%. Now, since NIO has the event, it's their own event, the implied volatility for NIO by itself is going to be higher, since the event directly affects them. So you can see that these are pretty expensive, $4.45, and then the 80s are 84 cents. So these are very expensive. So now, if we look at Li Auto, which can be a simply played in NIO, and we go back to the January 15th, which also covers the NIO day on the 9th, you can see that the implied volatility is less, 91%, and the contracts are a little bit cheaper. Now, this might be because they are a lower priced company, but as you can see over by the chart, they had a very similar run up that NIO did. Now let's go over to XPEV, and we can look at something similar. They also had a massive run up, and then they settled back down. And then we go over to the option chain for January 15th. The stock's currently trading at 46.38. The implied volatility on around a 4 or 5% out of the money option, or 8%. I'm sorry about that. 8% out of the money is going to cost you $3.50, and the implied volatility is 99.24. And you can go all the way out to the 70s and 75s. These are 88 and 67. Now we can look at the high was 74. So going back to the option chain, these 70s and 75s do make sense. So if you want to take a shot at these for NIO day, this may not be a bad option. That's pretty much it for today's video. If you guys have any questions or any comments, leave them down below. Be sure to like the video and subscribe so you get notified of all my new videos. I hope you guys have a great weekend.